Welcome to Markets Now. I'm Michelle, work with Brad Kooima of Kooima Varilek. Seeing a lot of green on the board this morning, with the exception of some of the soybean contracts. And Brad, let's talk about cattle. First of all, let's start off with the record cash that we saw last week, again, for the 6th week. And we're continuing to see a lot of sales for all the way through June, right?
Absolutely. You're spot on, Michelle, and thanks for having me on again. Cash continues to outperform even the most bullish of analysts here.
Yes, that would be you.
Yeah, I think, I thought cash would be a little bit higher in the north, and I thought maybe the south would wake up, smell the coffee, and try to, cut down that basis or that disparity they've got. A week ago when we were getting 230 to 231, and then they, kind of passed on 220, and I thought, well, last week, they'll do something. So instead, the north was 4 to 5 higher, and they were 2 to 3 higher. The 223 is where the bulk of their trade ended up being on Friday. But, back to your point about the 235 and the record prices in the north everywhere, but led by the north. I can't help but think of a quote there stuck over there underneath my desk edge here. The beginning and the end of all markets start in Iowa. And people can laugh at that and argue with me, but I think that there's a lot of truth that the whatever the market conditions are in the north are very, very important. Most of the times we're the problem, where we're not current, we're backlogged, and we're fighting the market. And 2015 and 16, you want to have a reference, but now it's the opposite. And these guys are anxious. The calf fed guys are anxious to get in on this big market, I think, Michelle, and they're happy to take the price. Your point about selling cattle for the end of the month, I know Friday afternoon yet there was bids of 235 for the last week of June to a major, which would have been basically fully steady for the next 4 weeks, is what that major's telling you, that he's willing to take on risk for that. And I just don't see how that can be interpreted as being bearish at all. So I think as long as we continue to stay current here, barring obviously black swan, and the irony of that, the last time you and I talked, we were a few minutes from having the screworm story come out in Missouri, which was all false. But you can see how sensitive the market it is. But the fundamental stuff is awfully good.
Right. We did have a lower week in the futures, though, but have you ever seen the basis this wide, the disparity between cash and futures?
We actually had a lower week on feeders, too.
Yes, we did. Yes, we did.
And to answer your question, no, not since, weird stuff like COVID and things like this. I mean, to have a non-black swan event market, to have this kind of a basis is crazy. I hope I've gone to some meetings with the CME. This contract is losing touch with total reality. Now I know that the person that's going to defend this contract is going to say, yeah, well, don't worry, we'll even it up. We'll get there by the end of the month. I'm like, we'll see. We never really had
you're
great
a producer. How do you use the board here for risk management, Brad?
If you were a packer and a packer is willing to bid me 235 for the last week of June, but yet you don't dare to go long futures at 215.85, I mean, why would not the natural long commercial, right? Why would he not be participating in this? I don't have the answers other than to know that something needs to change here. They've made all these rules to fit the hedger. Every since I've been in business, every rule change they made the contract bigger. Now we added heifers. You can't demand delivery. The packers bought out 3 weeks. So if you catch delivery, you can't get them dead. We got to keep the delivery system, but we got to fix this thing so that it's attractive to the long, natural long, and the long speculator.
Well, because we're kind of on the roll here with talking about this, I was going to wait, but let's talk about the expanded limits that we are now under here today and how detrimental that could be for producers.
We're on the Brad Kooima not going to win the sportsmanship trophy roll here today with CME. No, well, today is the first day of expanded limits. Quiz. Somebody call me and when they know, because I'm still looking. When's the last time we were limit up on cattle futures? Anyone? It's been years. Okay. We were limit down the first week of April when we were worried about tariff stuff. There is no need to have expanded limits. Just that 650 was too big. they say it's based on a formula on what the volatility was since the beginning of the year, blah, blah, blah. The market's more than a formula. This is going to drive the small speculator away again, and the small hedger, because now next thing will be increased margins, because we could get more at risk because we got this bigger margin. So you're going to chase more of these small hedgers even to a packer contract, which those ought to really work good when you got a plus $20 basis. Come on. There's no reason. But even worse, in my opinion, even a worse idea than that was this thing that's getting floated that they're thinking about trading cattle at night again. It's a terrible idea. It failed the first time. Some algorithm comes in and sells 100 loads of cattle at 2 o'clock in the morning. You don't think that that's going to have a super big impact on the market? I mean, I just hope that this is someone's bad idea that goes away. So the increased daily limits are one thing, but trading at night, there's no reason, in my opinion, at all.
And not just at night, Brad, but 24/7.
I know.
So that would be 7 days a week in a market that is much more illiquid than we have with corn or some of these other things. So it's easier to move the market anyways then.
You and I will be done, because I am going to quit if that happens.
I know. None of us will get any sleep, to your point.
No.
All right. Let me follow back up on another positive in the market. Box beef prices still at the second highest level since COVID?
Yes, ma'am. This would be the all-time high were it not been for that, when the Packers ran the boxes all the way up to like 445 or something like that, when they couldn't get any cattle dead. They made a little money then. Remember that? I hope they saved it, because they're not making much money now. So how can you say anything but demand is still good? Both domestically and even I think globally, demand is still okay. Now, you got to have a caveat here. I mean, because tariff talk is still very real, and ask somebody that buys steel this morning how their world is today compared to last week. But domestic demand and led by Scott was sharing an interesting article with me about what the millennial is doing. The millennial has been the core of this demand base for beef, and good for them. I think that there's still, to me, some look back that the one good thing that came out of COVID is that that generation and others learned that they could cook a steak at home and do that 2 or 3 times a week for the cost of going out once a week. And so, that model really moved a long ways. That needle did toward, that traditional demand, the way most of us grew up with cooking their own steaks.
Right. All right. One last question. Let's talk about New World Screworm, because USDA threw $21 million at that last week to get sterile fly production in Mexico increased. How long will the border stay closed, do you think? Because they said they're going to look at it every 30 days. I
don't know with any, I can't be, definitive and say I promise. But what I'm told is that I'm going to guess that it doesn't even open this year. Okay. That's what it sounds like to us. Indefinitely, words like that are coming out of the USDA. Well, maybe taking a hard look at it. I mean, with this, one thing about that scare of last week, I think that may have reinforced the idea that we've got to do everything possible under control to make sure it doesn't get here. Now, it can be eradicated. We did it once in the 60s. You mentioned the sterile male fly thing. Ivermectin is useful, but you just as soon not get it. That's why they're so aggressive with this, trying to be proactive in stopping it from developing rather than trying to treat the symptoms of when it happens. So at this point, I think we're still, several hundred miles from our border, 500-ish from the nearest incident. But this thing's going to be tough on numbers here in Texas. They source, last year was 1.1 million cattle. So when this whole thing started, Michelle, we thought, they'll miss a month or two and then they'll make up for it by having extra. You're talking about over 100,000 cattle a month that normally would go in that aren't. So in an already tight feeder cattle supply market, it makes it even that much more dramatic.
Good point. Okay. Hogs are up except for the June contract, but we have been chasing cash and cutout values, and the cutouts are now at new highs for the move. How much farther does this market go? Because the funds are now in here pushing this too, aren't they?
$1.12.
$1.12. Okay.
Let's just go to that. Anyway, I mean, I can come up with a technical objective for that, and that doesn't mean it's going there. I'm being a little bit facetious here, but you know, people like to have brokers, you know, take a guess at where they might go. But so I can see a chart pattern that would suit that. But what you mentioned briefly about the funds is a big deal. Joe tells me that we added like 65,000 open interest during the month of May to hogs. I mean, I've said it to you before. You know, you can talk about the funds, you can gripe about the funds, but I'd rather be on the fund side than on the other side trying to guess when that they're going to start to get out. So see the corn market, you know, there'd be an example of going with the flow, whatever the fund's got in their head. So with his fund buying and with his improving fundamentals, yeah, let's see if we can't crank a little bit more out of here. They certainly are cheap enough compared to cattle.
Yeah, and obviously the Packers have been scrambling for hogs here, probably because of disease, which is pushing all of that. Okay, so corn and soybeans kind of going in opposite directions this morning. Corn following wheat, soybeans, is that China?
Worry that we're going to have a less than perfect demand situation, i.e. China, i.e. tariff stuff, 100%, and non-threatening weather, frankly, on all of our stuff here. We'll see. We're supposed to get a big rain in my part of the world here tonight, tomorrow. So we continue to, you know, get this early crop development off to a good start. But you're 100% right that the corn seems to be joined at the hip with whatever the wheat does. A little bit of weather premium, if you can call it that, down here, but a little bit of weather influence maybe in the wheat market is a better way to put it. Funds are a huge short in the corn, flip from long to short, and yeah, it's gonna take a little. You know, basis actually last week in some areas weakened down here on farmer selling. That's disappointing. We got some work to do, but I would say this just as a little tiny bit of encouragement is that it would be an unusual year that the June highs aren't higher than the April highs in the corn, at least. Let's hope so, but it's going to take some kind of weather maneuver or some kind of calming of this worry of being able to whether we could maintain good relationships with our trade partners.
Yeah, corn usually tops out in mid-June or so. So we'll watch it. All right. Thanks so much, Brad Kooima with Kooima Varilek. That is Markets Now.